much. Hello, everyone, and welcome to the live stream here for Monday. We are about to kick things off in a pretty big way when it comes. Hello. All right. Hopefully that's working now, guys. Sorry about that. We do have sound. Make sure you chuck it in the in the comments. We should be on the better microphone. Anyway, as I was saying, welcome to the live stream, and I hope you had a great weekend. Everything is getting pretty wild in the markets, and I thought we'd start off here today by doing a bit of a year-to-date review so far on what we're seeing on the markets. Obviously, we'll go through stocks, commodities, cryptos, which are absolutely heating up. Go Bitcoin, yeah. And even a little bit of currencies because we need to talk about the US dollar. I hope you had a wonderful weekend. Let's kick it off. And of course, we'll start here with the year to date. We'll give a shout out also to some of the people that came in this morning early. We've got Major, we've got Baal, we've got Roman, we've got Arthur, DB, Zach, Nando, Maddox, Main Source, Gareth, Sup Fellas, Silver Hot Dog, INF, Chris, Bob, Joe, Brian, and many, many others. Here's a good question coming in. Did the S&P dip enough to get back to its winning ways, or does it need to go to 5,300? This is a great question, Chris, and we will answer it. Also, Chris being a member of the channel, much appreciated for your support, man. I hope you've been enjoying the show. So, yeah, we'll get on to that question. It's a good one there from Chris. All right, let's begin with a year-to-date review, everybody, because this is where we have to kick things off. Can we continue to see bullish run into this election? Can we continue to see it into the end of the year? And, of course, what does it mean for the next, let's say, year or even 6 months for our portfolios and, of course, investment vehicles? Well, first up, semiconductors are still the number one best report kind of earner of this year. Now, there's probably no surprises there. We've had a pullback. Some people would argue this is like a double top and that we're seeing now a bit of a resurgence. And pretty much from the perspective of how they've done, they're up 37%. But I actually take this into a bull market perspective, mostly from a few of the others. Home builders, ITB, XLF, which is, of course, financials, Jamie Dimon and all his friends. And then we've also got KRE, regional banks. Now, it looks like regardless of whether the market thinks that the Republicans or the Democrats are going to win, obviously that's in flux. It's obviously, I can imagine everyone around the world is watching this one right now. It's getting so wild. But some people saying they're canceling Netflix. Maybe it's time to sell Netflix shares because it's getting so wild out there. But regardless, it seems like these market movements are, of course, moving anyway. We talked about Russell 2000 breaking out regardless of political stuff. And I just want to kind of sit here, and I won't go any past this political point, but I just want to kind of, see the forest from the trees. Do remember, as long as there's not a clean sweep, in general, if you have a tightly contested race and you have a tight win, the market knows how to price that. So remember, markets trade off instability, that a fear of the unknown is often what they freak out about the most. So if you want to have consistency, it's really not having like a winner by too much. And I said this in my private stream that I do every Monday in the Monday Macro Show. And the reason I'm saying this is because it's very important to recognize that these trends happen anyway. They are happening because there is a significant amount of price action going into a momentum, and that the price action, the momentum, and following the volume is more important than following the storyline, because there's always these stories that are going on. I can't imagine how wild this is going to get over the next couple of months with this way, that way, every way. It's like one of those flappy things in front of a car sales boot place. But yeah, effectively, it's going to be all sorts of storylines. And I think that as you as an investor and us all as investors and traders, we're going to have to be able to look past the storyline. And as we always say on the channel, look towards the momentum, look towards the volume. So under the hood, year to date, home builders, financials, very, very strong. Utilities doing incredibly well, which we've talked about many, many times. And maybe a resurgence here, a little bit of energy off last week. Still have clean energy and solar down the bottom. Now let's go to the last quarter. So this is something I like to do as well. And the reason I do this is to see what's changed. Where has the flow gone to? So we can see the resurgence of IWM style stocks in regional banks, and of course the biotechnology as well. Somebody says, you've lost me. So I don't think we've lost the sound. I think we should still be really, really good. But just let me know in the chat as well to make sure that that's coming through loud and clear. We've already got 700 people almost in here. Thank you very much for joining us. So IBB, KRE, ITB, all of these are now the top three. So all really regional bank style, all Russell 1000 style sectors. So again, there's a huge flow there. And if you actually bring up the IWM market, you'll know it's only 2%, 2 to 3% behind the Qs this year. So IWM is sitting at around 12.5-ish% year to date. And I think the Qs are sitting at about 15. So 2.5%, so 15 flat. So can you believe it? The Russell 2000 has done all the work in pretty much 3 weeks, 2 weeks, and it's gotten there. Energy now the worst for the year, and that's mostly due to what you would say is inflation kind of got, well, not the worst for the year, worst for the last 3 months. And that's because inflation supposedly is going away. But I expect this to change a little bit as we talk about some stuff in today's show. Go to the 1 month. You can see here regional banks, home builders, materials and metals. So that's interesting to see metals and mining starting to pick up again. Again, if inflation's gone, surprising to see that. And the big tech down. And then we go to the last 5 days and you'll notice again, it's more regional banks, home builders, all of the small cap stuff. All right, we'll get rid of that sheet there of what's been going on around the world. And we will move through here. Don't forget to like, chaps. Thank you very much for Sado. Sound is Aussie clear. Yep, we've upgraded. I can tell you this, guys. I bought the top-notch connection. We are not going to have problems anymore. Everything is fixed. I know it's not Starlink, but everything is fixed. We've bought the biggest and the best. And let's just say I spent way too much on a router as well. So this thing should be good. Or what do we call it in America? I'm not even sure. Anyway, US 500. I moved house and it was a bit worse. So US 500, let's start off with this one because we need to break it down together. What are our key levels for the bulls and the bears this week? Well, let's go through each one of them. I do have some stuff on the charts here, but realistically, what we need to be looking at is, can we get that 5,300? Are we expecting to see that pullback a little bit later on? Now, there are some interesting things that I've seen over on X, and one of those, and I might actually have it here as a bit of information that I pulled up from before, and it basically was talking about the percentages of August. So I'm going to read these out. Okay, these are the last 5 Augusts to September runs. All right, let's start in 2019. Okay, so 2019, what we had was we had a weak August, and then it went flat in September. All right, nothing much to talk about there too much, but a weak August and flat in September. August 2020, it was strong at the start. Then it gave it all back by September. Okay, so clearly a volatile period there, which was 2020. Then we had August 2021, again, strong. Then it gave it all back by the end of September. So again, another one of those very volatile points. August 2022, strong. Then it gave it all back and then some in September. Interesting. That's 2022. Then 2023, weak. And then it also gave back more of it and then some in September. So what is this telling us? Well, it's saying that we should expect vol increasing between the months of August into September. And this is, of course, nothing new to anyone that understands their seasonalities. Between August and October, we tend to have pretty volatile periods of time. So could a 5,300 occur? I think it's very much a distinct possibility. And that's because we're in the fear of the unknown to a degree. People have no idea what's going on. And then on top of that, you've also got just in general valuations being quite high. So it gives a good excuse to do pullbacks. So let's break down the key points that we could even see the market at. What do I think is the base case? What's the worst case that we could get to? So I think the worst case is probably back down here to where we were. And you might say, well, that's not even that far. That's not really that bad. If you know anything about statistics, to get a 12% down market is pretty huge. So to get to a 5,000 would be fairly significant, pretty rare, and it would be against every statistic that we've so far pulled out of breadth thrusts. So I think the worst case would be something like this. Now, I would be interested to know what you guys think. We've got many of you out there. So what do you think would happen in terms of the markets here? Could we get a 12% down? What's your base case? What's the worst that you could expect by the end of the year? So that's the worst case. The best case is, of course, this is as low as we go and we bounce off this point. And something that I've been working on is kind of something like this. All right. Now, the reason I'm working on that concept is because I do expect volatility to increase. And I know that markets can be, kind of sneaky with the way that they trade. So I feel like this could be a bit of a thing. We get a rally, maybe come back to a gap fill, maybe then we drop off a little bit. We'll talk about 55.50, possible 5,300. But as I mentioned in our last two videos, and we talked about this a little bit in our private rooms as well, we discussed the idea that I thought that semiconductors in particular were hitting some pretty key levels along with big tech. Big tech and semiconductors actually went into a correction phase. They have to have some kind of bounce, whether that's a dead cat bounce or not, to be determined. But every single thing is pointing towards a bull case here over the next 6 to even 9 to even 12 months. We've got two breadth thrusts. Remember that, the 7070 breadth thrust, the Whaley breadth thrust. Both of these, in fact, the Whaley breadth thrust has a 100% win record over the next 250 days. So it's hard to fight against those. Remember, markets are inherently bullish, so going against them is pretty rough. So you're really kind of starting to talk about semantics when you're thinking how much can it come down. What we do know is volatility is usually around. Let's read some of your comments here. Sin says, Tom, you sound like you're in your living room. Oh, yeah, you are. Well, I'm not in my living room, but sure, I'm in the office, but that's cool. It's probably the sound of the coldness here. Remember, we're in winter, so I've got like that down. Thomas, surround sound system in his bat cave now. That's right. If stocks tank, would commodities rally? Where is the upside, says Jim? If the stocks tank, would the commodities rally? Well, it depends why they tank. Is it because inflation's coming back? That would be the question here. Base case is a pullback in time over the next few months and to end in a bull run towards the end. Yeah, I think that's probably fair, Luca S. That would be big there. And Sint says, I'm on the Roku. I don't think I'm on the Roku, but we might look at that stock soon because, yes, as you say, earnings coming in 3 days, something that we haven't liked for a while. But as you know, we do like good price action. So that's there. All right. Let's go down to the daily time frame here. So we saw some pretty interesting moves last week. A very bearish looking candle coming through on Thursday. I think we correctly say we did kind of predict this based on a few different analysis concepts. I know I often say don't predict. In this case, we were getting an oversold. We were hitting a few things that made me believe, at least with our semiconductor analysis, because remember the semiconductors came down to the weekly 20 moving average. That was a pivotal moment for us because it basically told us, well, wait a second, we have to expect a bounce here because this is something that we were talking about. So if we put them side by side, we know that semiconductors are not even arguably, they are the most important market in pretty much the US in terms of what has been driving this. So if you're getting a weekly 20 moving average, you've got to think that there's going to be at least some form of buy around here. You've trashed your set way into it, big aggressive sells, 2 -6% on Nvidia in a row. That's going to really get that kind of push through. That's going to push a huge move here. So that plus, of course, role reversal, resistance becoming support, which is a common technique a lot of people think about, I think is, got that little bit of elastic demand. So if we go over here to the left-hand side now and we look at the US 500, then we can get a couple of key points. If we get underneath 53.90, the only 2 points really worth paying attention to are probably 53.50 and 5,300 flat. And 5,300 flat, I think, is a very strong level for the buyers. If we manage to hold and close above here, so let's say day traders are looking and they're wondering about this 54.90, 5,500, which we brought up on our weekend video together, this would be that line where we believe that we could get to the most traded zone, which sits at around 55.55. So we'll break that down to a smaller time frame. Let's actually go down to 2 hours for a second here. And that's where that gap happens from the Google announcement. So this is, of course, Google and Tesla. So Google and Tesla right here. And that led us into a gap down on futures, which has led us to where we are right now. And you'll notice that we've tested this level twice. And it looks like we're going to break towards the upside today. So we've had this high. We've had this high. It looks like we're breaking up. So yeah, to me, 55.55, 55.50 is probably the next level that I believe the bears could be sitting at. As always, one of the things that I like to talk about has been, in general, talking about the thing I don't have here, which is usually to go with options and flows. I'll grab that chart up. 1 second. Let me just grab a new one here for you, and we will grab that right now. Okay. So for the SPX, because what we're really trying to do here is we're trying to delineate, is there something that we should be paying attention to in the options world? You know, where are the biggest options trades this week? We know that zero DTEs are ruling this market at the moment, especially in the S&P 500 side. And if we're able to find some edge with our technical analysis, remember always, in my opinion, it's number one TA, it's number two data. Data is very important. And you know, in order, I guess I like money flow analysis as well, which in ways is what we're doing in options. You could even argue options are becoming the most powerful concept of the S&P in general since zero DTEs took over. So where have we got our big ones today? Well, we've got a huge amount sitting at around 55.10, and we've got a lot sitting at around this 54.60. Now we're trading at about 54.93 at the moment. So we're a little bit higher. We're actually gapping up. So we're basically going to be going straight into a little bit of a call resistance to switch potentially from a negative gamma situation to a positive gamma situation. This is not something that we've had here yet. So if we do break above 55.10 today, then the next level becomes pretty clear at 55 kind of 85, I guess, from today's perspective, or that 55.35. Now there's not too many. I would say this is a massive, massive combination of calls and puts that make it incredibly confusing about where your key zones are. If you go over to the next session, which is the 30th of July, then you're going to get that 5415 kind of strike, and you're going to get some really clear delineation around 5490. So I think we know 5490 is a pretty big break. We break above, I'd be looking at the next session, but I would say that the initial reaction would be get above 5490, 5500, maybe even we have to break 5510. The movement from 5510 to 5555 should be fairly quick because that's where that big gap fill is. And of course, the big technical resistance is at as well. So technicals can help us there. 55.85 was a strike we used to actually kind of figure out that we were probably going to get a bear there the other day. So I would say this is incredibly confusing to look at. This is a little bit more clear, but we'll get the update on this after today's played out. So today is up, down, and all around. It really is. And that makes it a little bit difficult, but there'll be single stocks we'll look at in a moment. Nando P coming in with $10. Thank you very much. Who will win the US election candidate? Who wins the US election candidate make a difference to the market by end of year, i.e. Trump wins, bullish for rally, etc.? No, not in my opinion too much. Look, there are, of course, some things that parties will bring, but it depends. Remember, it's the size in which they win. If they only barely win, it doesn't allow them to pass as many changes as if they win by a landslide. So, Nando, in my opinion, it won't make as much difference. Of course, you could argue that deregulation might become much bigger under maybe some of Trump's rules, though I'm not really over that much, so I wouldn't know. So to me, it's just really how much does either party win by? If they win by a ton, then you're going to be looking at a lot more of their reforms. What does this mean for, of course, these stocks and these sectors moving forward? If they kind of just get loggerheaded in, then it's more of the same. So you can really still go back to your semiconductors, to your current rally, kind of like late cycle investing scenario. So yeah, it's a great question, but I don't think, and thank you very much for the donation, but I don't think you need to worry about it as much as everyone's going to make you freak out on the media about. That's a really important one here. Kevin says elections are irrelevant. Yeah, I think it's just you just need to realize that is it going to give you edge? And if it doesn't give you edge, and it doesn't give you like an advantage to get, like, you might think it does, but unless you've actually gone through and done the stats, and I encourage you, go and have a look at the stats, you will find that there is not that discernible difference as long as they are tightly contested. Okay. If they are not tightly contested and you get runaway, it allows for radical policy change. And radical policy change enables, the market to freak out, because the market can say, oh my goodness, I don't know what's going to happen. We don't know how many different weird tax laws or other things might happen to the market. And all of that can create, a lot of disharmony inside of the market conditions. So let's go over to the Nasdaq and have a look if that gives us anything. Yes, we'll cover crypto in a moment, which is going very nicely. Congratulations to anyone on Bitcoin. Anyone here actually on the Bitcoin hype train at the moment? I'm not always on the Bitcoin hype train, but I have been in recent times because, of course, we kind of called it here correctly. We understood that we were climbing the wall of worry in this case, and it looked incredibly bullish. And you know what? The thing has barely even pulled back. It had a excellent day trade last week at the end of the week. A fantastic little bounce off that zone. Really enjoyed that one. It was actually textbook to our day trading masterclass setup, and it was a beautiful setup. So the thing is flying off that level. We're almost about to hit 70K. Might have even done it before. DocBoxer spot on with the big election win analysis. Please note, Dems in the White House has a longer track record as being better. Yeah, look, again, you can even break it down. You'll notice it's not too dissimilar, but I get what you're saying. Again, break your stats, break the data. You might have an opinion on something. We all do. I'm not bringing it up here. But the data doesn't lie. If the data is saying that it is split in the middle or very close to that, then you just got to go with that, because it's your money. It's your money. It's your hard earned. You've gone out there and you might have worked your ass off 40 hours a week, 50 hours a week, 60 hours a week to get that money. You don't want to lose it by making poor decisions because of your emotions. Remember, the greatest investors and traders in the world, guys, and I took a long time to get here. Believe me, I was very emotional when I started getting into trading, investing, well over 16, 17 years ago. The way I looked at it was, I was like, oh, I'm right. My opinion is right. We are fed limited information. So look at the data. If the data says there's no much difference, then you just got to go, okay, well, I've got to eliminate that. It's not going to give me much edge. What about the price action? What about the money flow? What about the options? What about these other things? So important for us. So let's have a look at this. Nasdaq down 10%, pretty big pullback. So let's have a look at how big the pullback that is when we compare it to the pullback here, which was only 8%. And this was, of course, the one that pushed the S&P lower. And that was an 8% pullback back in April. So this was a March into April position. And then if we actually look at the pullback over here, and the reason I'm doing this is just to show you how deep this pullback really is, at 11.37%. So we had an 11.37% one during the October fall off. That was actually a pretty excellent entry. Then we've had a steeper and deeper pullback over here that actually almost gets all the way to 10%. Now, around this level, I can't hate on it. Does anyone actually hate the Nasdaq here? I mean, you might say, well, Nasdaq's overpriced, so it should fall. It's in a bubble. It's going to explode. But I don't think that we're seeing those signs. And, some of the things I don't put too much in there. I know we don't maybe do enough analysis on the Nasdaq because I don't see it usually giving you that much edge. In this case, I saw it and I went, oh, we have to turn bullish for the next couple of sessions. How can we not turn bullish for the next couple of sessions? We've smashed into trend lines. We've smashed into the weekly 20. Chuck these things on your charts, guys. Put them on. If you enjoyed today's show as well, make sure to give it a thumbs up. Thank you very much, Joyce Fung, coming in as a new member. Much appreciated, Joyce. Thank you very much for that support. And Crash GXR 750 says, I'm in the 401k. I've got 90% in the small caps. Oh, wow. I like your diversification there, Crash. Well, firstly, be careful, man. The 401k is your retirement saving. Yeah, that's like your super. You got to be careful there. So I probably wouldn't suggest you have 90% in anything, but hey, it's your money. You're making your decisions, and all speed to you. Anyway, he says, how much more can we expect small caps to go before and after the first half? We'll get onto small caps once we're finished with the NAS, man. So don't worry, we'll go there. Ponzi says, that's right. Don't be stupid. Thumbs up. Fair enough. XHB through the roof. Absolutely. Not a bad thing for the economy. It's juicing, guys. It's juicing. 2.8% on the GDP. Let's be real. The economy, even though we all think it sucks, kind of doesn't suck. Remember, inflation caused by the governments, by the way. And I'm not going to pick any particular government, but let's just say in Australia, it's the same thing. They give us money, it's instantly inflationary. Remember, when they print the money, and I mean the governments print the money and they say, oh, here you go, have this bag of cash. We need to give you all bags of cash. Oh, the debt, don't worry about the debt. It's all good. That's inflationary. So, yeah, all of this stuff was caused by them in the first place. I'm sure there would be, Nando, for sure. We've seen some wild things. If one party's in control of the whole White House and Congress, then they break things. Well, at least it's not so much they break things, but they hurt. Well, they make radical changes, and the market hates that. So anyway, I like this trend line, and this trend line is pretty nice. It's certainly consistent. It's got a series of higher highs and higher lows, which of course you're always looking for a good trend line. If it doesn't have a series of higher highs and higher lows, then you're a big fail on it. Look, I'm not a huge fan of trend lines because they're pretty subjective, but we hit something like this. We also hit into a range that I obviously had as a major bull zone. Now, my main problem with this rally is that you'll notice whether I look at the SP500 or I look at this Nasdaq, while I do think it hit a oversold zone, it didn't quite hit into the area that I would believe would be a much better zone, which is something like this 18 kind of 5 level. So because it didn't hit there, it kind of makes me think again that we might get a rally into a dump. Now, what I wanted to bring the Nasdaq up for was a couple of things. I'm going to chuck two things on the charts here together. The first one is I'm going to put on a fib, and I'm just going to put a fib of the top to the bottom. And of course, we're looking at a 61.8 and a 38.2 fib. And we're not quite at 38.2. That's going to take us to 19.5. So 19.5 might be worthwhile paying attention to. Generally, if you are still in a sell-off, that can be a very consistent kind of pullback, still not super aggressive like a 236, but a 38.2. Another thing that I would generally do here is I would mark out maybe a couple of anchored VWAPs. I'll just chuck an anchored VWAP off the top here, and we'll notice that that's coming down, and that's getting closer now into where that gap came through. So this is, of course, where we got the Google Tesla combo last week, and this week we've got even more earnings, so we'll look at that in a moment. But this gap here, I do believe is quite important. And if the market is to rally, let's say it is to break this zone through, and at the moment it's trying to do that, then I feel like that's the next level where the bears will sit. So the bears will probably sit around this gap fill. So you can look at NDX as the code I would use. So gap fill here could be very, very important. Now, the market that doesn't seem to be following any of these things, because the Nasdaq and the S&P have a very similar trajectory. So they either fail pretty much right where they are right now today, and they fail here. So 54.90 to 55.10. So 54.90 to 55.10, according to the options on the S&P, pretty much around here for the Nasdaq. Or if we do close a little bit bullish today, I've got to think that gap fill's coming. Now, if we go to the US 2000, so the IWM, the Russell, this is a different story. What the Russell is putting in through here is, and that must be an old note, is basically that we have 24.30 on the cards. We haven't broken to a new high, so you may want to mark that in for your day trade kind of concepts. But 22.82, if we manage to get above, we close above there, it's suggesting that every pullback we should be looking for minuscule kind of changes towards the bull end. And that'll push us into 24.30 ideally, get us that bullish market. And of course, the Russell is flying at the moment. This looks like accumulation inside of the uptrend. And the trend is pretty significant. When you go to the weekly, you'll notice here we split that. We've got super bullish as a team together. You guys were smart. You had big brains. Maybe what was it, Crash Mix or whatever that has Crash GSR when GSX went a little bit crazy because he put 90% of his 401k in. I don't even want to know about that. That is just too wild. But he's pushed that up. And he's put all of his money in to try to get this thing here. And hopefully he's now protecting his money. But anyway, he's pushed at 22.50, as have all of us. And now we're looking towards the 24.30. So I do feel like this is still a strong market. But what is your target? I want to hear your guys' targets for IWM. So this is the Russell. So we're going to put in IWM words. So at the moment, we are at 225. I want to hear your year-end target call for IWM. And then I'm going to give you my random target for the next 9 months on the S&P. No, 12 months, 12 months. Give me 12 months, okay? 12 months for the S&P. I'll give you my random target for the S&P in 12 months, which is based on some data that I've been kind of working on, some data I've been working on in the background. But I want to know what you think for IWM by the end of the year. Let's have a look. Rich Buddy says, good day, Tom. Hey, Rich Buddy. Get out of the paddocks, man. We've got to get out of the paddocks, Rich Buddy. David says, oi, oi. Hey, David, great to have you here. Matt Collier says, if one party's in control of the whole White House Congress, they break things, sure. It's possible. But let me translate for Tom. You are a wild person, that's sure. Crash says, Nando says, you are a brave man, Crash. Absolutely. You certainly are. And Jim says, Naz, I would like to see some dunk to the 200-day SMA, but it would have to be at the 168 extension of the current dip and 15% downturn. It's possible, Jim. 15% downturn, another 5. So another 5,300 for the S&P. It's about right because it'll be driven by Nasdaq. But I can't hate where the Nasdaq got to last week. We got almost 10% of a predicted potential of around 11.5% decline. We got semiconductors to the weekly 20. It's hard pressed not to see a little bit of rally off those. All right, we've got a couple of comments coming in here. Maybe all-time highs for sure. That could be a big one there. Ponzi says IWM 17,025. So you're going to say things are going down. They go cray, debt, etc. Your random target for the silver hot dog. What are you doing, man? You're just breaking it out there. IWM 254 from TX Redman, 280, maybe all-time highs, 425. That's pretty bullish. 250 at least, 232. We're talking end of the year. End of the year, only those levels. 270. How about copper? We'll look at it in a moment. Super oversold. 265 IWM. Yeah, we will talk about gold. Don't worry, funny yummy. Also, thank you very much to the many, many hundreds, if not thousands of people that are joining us here this morning. Thank you very much, guys. If you can click the like button, it does help us out as well. We're over on X as well. If you ever want to follow along there, welcome to everyone on X. So we're probably looking at around a 280 for me. Now, you might say, well, why so much? It's because generally when you start a new trend, you don't usually just get this little bit. It usually consists of a fairly long running move, and that running move should last around 3 months. So we really should have 3 months of move. Now, let's argue that we probably started moving July. So we've basically moved off 1 month. So in 2 months' time, theoretically, we should at least still be on a bullish trajectory. Now, that's if the current trends of normal fund flow work. That being said, daily long leg doji against the highs. I am quite bullish this pair. I'd like to see it continue to go up. So that would be good. All right. You guys want to see gold? Let's bring on gold. Probably my most bullish pair of 2024. Yes, I do like gold, and I feel like it could go quite a lot higher. And yeah, this is a pretty big, interesting move. So basically, gold managed to find support at 23.56. Its secondary support would be 23.25 if you're looking this week. So somewhere down in this area. I've done some analysis. I think that's a pretty good level. I don't mind the bounce that we've seen so far. I wouldn't say it's exceptional, but it's not too bad. For day traders, they would be happy around 23.82 in terms of seeing bullish power there. And for swing traders, you're going to want a 24.30 above. So I think that above this area, you're really looking for that kind of bigger gold move, and that's going to be a huge zone. So mark out 24.30 this week. At the moment, the market seems to be finding a little bit of bull pressure. You could argue that some things are on downward trends. I mean, of course, this was a very nasty candle last week. Not great. Shooting star, of course, a bit weak there. But I do like above 24.30. I would think that's a pretty strong move. And if we get above that, I feel like swing traders are in. It also should counterfeit that nasty weekly shooting star here with the big rejection. So we should be able to counterfeit that by getting above 24.30. I think 24.30 is the really significant bull trigger. And my favorite level in terms of the bull buys is probably 23.30. 23.30, 23.20. That's my favorite bull level. But the level we're at right now makes sense as well. So we've got 3 levels of bull. Does anything change in my overall bull schematic concept? Not really. I think we've got central banks buying it. So some of the cases that I like for gold, let's say we do get rate cuts. It's good for gold. Let's say we go into stagflation. It's actually good for gold. let's say we get more central banks are buying. I believe central banks will continue to buy it to try to reserve currency themselves, which is, of course, bullish for gold, in my opinion. And we then have, the myriad of lost decade style trading concepts that are good for gold. We have around the right timing. And of course, we are, in my opinion, at late cycle, which makes gold a safer concept than some other trades out there. So I am bullish on gold. Yes, I am. And I have been for quite some time. And it turns out that it's one of the best asset classes of this year. So, yeah. Now, silver is a little bit nastier. Of course, it's the wilder version of it. I thought silver would go a little bit more bullish about a week ago. I don't like the silver price. I looked at this today. I wish I could say I like it, but I don't. I feel like it had to hit 27.23 or 26.50 for me to really get bullish on this. So it's kind of suggesting that maybe even gold hasn't found that proper low yet. I don't know what silver's doing. I feel like it's the middle of nowhere land. If you went short underneath here, closed below bearish, that's a pretty good short. Difficult to get into because it's a very momentum. You can see here, obviously, the bulls usually take the stairs and the bears take the elevator. So they tend to go very, very quickly. But it was a fast move. And I would have thought it would go all the way down to 27.23. So again, some of the key levels that I would stick to and be very religious on, they're not quite, getting through there. So yeah, they're not quite getting through to the points that I would look at. Wollongabba says, if you haven't already covered, I'm interested in your thoughts on copper. Yeah, we're doing copper in a moment. So let's go from gold and silver over to oil. And I want to talk oil because we failed to get above 79 a barrel. And we've pulled back down again here today after being a bit more bullish before. So basically, oil is still negative on the charts. I liked what I saw last week from this big candle, but I'm going to be very consistent with 79 a barrel. The main reason we're doing that together is because I do think, again, like silver, there is downside trajectory possible here on oil before it goes long. Now, this is a bit different to the energy stocks. So if you look at the energy stocks, we go to XLE for a moment. XLE is still kind of slowly going up. So it's holding its own and going up. Still bullish on the sector. I still think the price action looks pretty good. Weekly managed to hold its own. Notice here that the weekly bulled back up after getting rejected. And I don't think that looks shocking. So yeah, I still like the energy sector, although it's coming in a little weaker. Price action wise, not bad. And US oil, the barrel, that hasn't given us the momentum yet that we want there. Would you think that the dramas in Venezuela would put up oil bulls, but it's not happening? Again, that's a storyline, Nando. This is again proof of what we're fed in the media. Obviously, not good stuff going on there, but what we're fed and what we think and our perceptions mean nothing. Never trade off those perceptions. Instead, trade off the price action and off the reality of what we're seeing on the charts. Yeah. Silver is above at 28 now and in no man's land. Yeah, it's a tough point there. Rocketman says BTC 120K before September, mark my words. Well, I definitely think we're getting an all-time high. I said that the other day. Chris Paulson going for 300. He must be from, was it Funstrat? Are you Tom Lee, Chris? Are you Tom Lee? Obviously, Tom Lee calling for 300 Russell by the end of the year. I like Tom Lee because at least he's optimistic, which is kind of good, I guess. I am, no doubt, closet bearish, fully for 2026. I'm pretty negative on it. I'm pretty negative on the late cycle, but you've got to remember we're not seeing the signs, and I think the difference is that you've got to be willing to do the price action base, the database, and understand that you can be negative on markets or positive on markets, but you have to have a healthy level of skepticism both ways. You've got to say, okay, we're bullish, but what reasons are we bullish for? I think we're in an AI bubble. Does that mean I go and get rid of all of my AI stocks? No, because I'm looking for the signs of the top of the bubble. And you might say, well, that's naive. Well, generally bubbles pop a certain way. So as long as historical bubble popping, which has been pretty consistent, pops in a similar way with similar data stats, we should be able to probably avoid that one. Do I think it is a bubble? Yes. Do I think AI is the future? Oh, of course, guys. We all do. But we know also, now when I did a lot of study on this, I went through like a few thousand years of analysis. And you might say, how the hell do you do a few thousand years of analysis? Well, because I look at great societies and I understand that when we come up with excellent innovations, there is a timing behind that. There is a concept of how long it takes us to implement this stuff. And I can tell you we're not there on AI. So I believe we're in an AI bubble that will pop and then everyone will call it useless, but it's still going to be amazing. And there's real data behind what we've done in the past. And I'm not even sure it's the largest, craziest thing we've ever done in terms of innovation. I thought about this a little bit, and I would say railroad was incredible as well. Railroad was absolute mind-boggling, and then it was just is wild what happened on the railroad. You got to think of it, displaced tens of thousands and hundreds of thousands of people. It took what took 50 days down to a few days to move. It was just absolutely mind-boggling what it did to society. So yeah, that was pretty amazing. But anyway, XLE looking good. Let's go over to copper. And I've noticed that there's a big super chat coming in from someone I know quite well. Big Silver, thank you very much. $50 USD. That's a million Australian pesos. And it says, a bit of unsolicited advertising for FXE. Thanks very much, man. Market Masters Club paid for itself in one trade after I first signed up. And it teaches you to fish or refines your fishing skills if you already know how to fish. Tom and Ty at FXE, a double plus value for money. Thank you very much, man, with the love heart. Yeah, it's been great to see your journey coming in. And obviously, you've been putting in the work because you're there every day and you're always discussing, sharing things and stuff. So much appreciated, Big Silver. Didn't expect you to do that, but thank you very much for the $50. And yes, if anyone does want to join us and come on over, actually, I don't know why I don't have this on. There we go. There we go, guys. So thank you very much for the $50, man. And thank you for the kind words. All right. Well, and I hope you keep going well in your trades because you're doing pretty good. Now, let's move over to copper. This thing is horrendous. Yeah. So copper weakness generally shows two things. This kind of weakness like this shows that usually rate cuts are coming. Now, when you see copper weakness like this, it does generally tell you that. And you might say, well, what about before? Well, it's actually about a ratio. But let's just say I looked at the ratio and the ratio certainly says that rate cuts should be coming. I find that hard to kind of comprehend because I think it's going to cause reinflation. But anyway, that's what's going to go through. And what I did was I did some analysis on copper. And I do think the thing is ridiculously oversold by most metrics, including my indicators. However, it didn't hit my 4 level. So what I do feel like is it could come down to the 4 level. I really like this 415 now because the 415 has been rejected once, twice. You'll notice that's a very large wick rejection with another wick rejection. So that kind of shows us weakness here on copper across the board. And it's pointing towards maybe the market coming down a little bit more, maybe hitting 4. Then if it bounces through 415, I would say that it's completely oversold. Now, I wouldn't blame people for picking this up on the 75 retracement fib and saying, you know what, we're going to just throw a little bit of a scale in on it. And I'm going to put a stop below here. And I'm going to say it's oversold. It's time for a buy-in. Look, I've got a lot of metrics saying oversold. But first up, copper versus certain other asset classes is pointing towards, that this being a real rate cut in September. That's not my opinion. It's the opinion of copper. If you were really being an aggressive mad person, then you could theoretically have a go at it here with stops below this low or the low I mentioned, because it has shown very small time frame change of trend, but overall still very negative. And I'm looking for it above 415 on the daily close. And then we can probably move forward with the bullishness. I think that it's so oversold that it's probably in that kind of very risky scaling if you know what you're doing. And yeah, I'm watching it very, very closely. Thank you again for the question here. Fire, the greatest invention. I didn't go that far back, but fair enough, Tony. You certainly could go there. And FXE kills FX evolution. Yes, that's correct. I like that fire is the greatest one. What about rock? Tools, crude tools. I was under the impression American reserves can pretty much hold up the pressures. I'm not sure what we're talking about there, but okay. And Ben says speculative gamble on penny stocks on Planet 13. He took a position. Oh, wow. 8 consecutive reds have been decent buy last decade or so. Yeah. So what he's saying there is if you go in and you have a look at probably going into the weekly. So if you think about it, I'm assuming it's not the weekly then because there's 4, maybe it's daily, but Anyway, this many down. Let's go to the daily here. Yeah, so 1, 2, 3, 4, 5, 6, 7, 8. Bull. Okay. It is a good read. It's not actually just like throwing money and going, oh my goodness, look, I'm gambling or making a stupid decision. You know how like a lot of people when we let's have a rule, hands up, people, anyone that's ever gone through and just said, I'm gonna buy the dip. And you never know why you bought the dip. You just bought the dip because it was a red day and you felt the FOMO and you felt the passion towards buying the dip. You know, when you first start, that's what people do. I would say like 70% of retail traders, they say they do TA, but we don't. We know what they do. They just buy and they just buy because they feel the emotions and they let that go through them instead of actually thinking about it logically. 8 days down, smashing into a demand level, smashing into an oversold, showing you indicators that are oversold, you could do worse. It's probably statistically in your favor when you start to really break it down. Of course, what Wollongab is getting at is if you go to any chart where you have 8 days of consecutive brutal selling, that usually means it's too far past certain indicators. So this one here is the 50, but I'll put the 20 on. I'll change it to red just so you can see what I'm getting at. It's too far away from mean reversion. So at this point, we have the market basically sitting around 7.69. I bet you if you ran a stat on that, you'd find that that's quite far away from mean reversion. And often when you get those types of brutal sells, if you ever get those consecutive selling points, it will rebound. So that's a good point there. So others here use stochastic oscillators. Not really. I mean, stochastic is something that I used to use a lot. I've got it in one thing which I talk about, but yeah, I don't use it too much. Stochastics on the daily chart for copper are showing me that positive movement is just about to start. Yeah. That being said, stochastic is actually a better indicator, generally speaking, inside of a range bound market. All right, let's go through some stocks. Let's break down stocks. First up, just quickly check VIX. Remember, VIX 20 is something that I am wary of. I do believe that, therefore, the rally may be short lived and create another short because ultimately it's probably going to hit a 20 at some point. That's usually what you would expect. And if it goes anywhere near what happened last year, we got that kind of August hit at 18, rebounded. Then all of a sudden in September and October, the market went wild. That could be what we're presenting with this year. So we'll have to be on the lookout. Definitely volatility. Bitcoin, before we go stocks, looks great, looks fantastic. I can't hate on this chart. Weekly close, although it never closes, but still weekly calendar close. Very, very nice. Looks like it's going to an all-time high. We've said this for quite a few weeks now. The bull on Bitcoin is a pretty beautiful thing. And if you managed, anyone pick it up at 64? Anyone get a 64 buy on this? Pretty good. Few people putting their hands up for their they're making the poor mistake with the FOMO. And Mitch says, buy the dip with at least 7 other reasons to do so, smiley face. Yeah, that's right. I do like that. I do like at least 7 other reasons that are separate from each other one here. Someone has called lows 50s a while back. Yep. So, well, someone did buy it at 64, but I'm assuming somebody here probably got into it. Stochastic in Greek means thoughtful. There we go. Jim just taught me something. Samuel says, is Starbucks looking like a bounce off 72? That one's been in a pretty big decline. So, yeah. I do also think alts look amazing. I wouldn't be, next week, we might do about a 10-15 minute session on alts alone. I'm going to bring up a bunch of alts because if Bitcoin breaks a new high, the alts are all pricing really, really nicely. So, yeah, I think the crypto market's probably one of the most exciting bull markets at the moment. Also, US dollar broke up. So this one failed. So therefore, it's probably going all the way to 104.70. So you can see here, it was trying to get down and then it just failed after considering in the consolidation. So it's coiled. It's probably going to have to move into supply. All right, stock time. Let's go Tesla first. Tesla, I bring it up first because I say it's in nowhere land. That is nowhere land to me. Not every day is a great day for Tesla traders. Realistically, if you're in this market, it's still kind of be short. There's not much to like about the chart. I know it's up pre-market here, but maybe it's an island reversal. In general, it's not really coming off a zone that I thought was too good. So Yeah, I would say the middle of nowhere for that one. Major stocks, let's have a quick look at Nvidia. Didn't manage to put in a green on the last day of trade. So 113.61 at the moment. I really liked 109, which you guys know, 110. And when I saw it at 108, I tweeted on X. Follow us on X if you're watching here as well on X, because that was a pretty exceptional, like, oversold zone. Again, I think this gap fill is the most interesting point this week, which is around 122 for this. So the reason I say this gap fill is interesting, because guess what sits there? Can anyone guess the indicator that I've got on the chart and why I might be talking about this one? I'll give you a hint. It happened before over here. And while that happens, let's read a couple of chat comments. I see a lot of crypto alt movements are correlated with ETH. That is correct. Anyone see this, or am I tripping? No, it's consistent. It's always been consistent. So basically, the general rule is Ethereum will move after Bitcoin in terms of a big way. Ethereum then moves second. So Ethereum is the second coin, and then you get the altcoins. It's a pretty common concept that's worked for quite a while. 20-day moving average, absolutely. Yeah, that is the one, the 20 DMA. So you'll notice here we sell underneath it, we buy into it, we sell underneath it. So again, this is my case here for this market. I feel like the market wants to go bullish, pull up into this gap fill. If the bear's going to be there, that's kind of the point. And that's consistent through most of these analysis points we've been looking at today. And then 5,300. Nando saying, can we have a look at odd US dollar? We will, but thank you very much for the donation. But let's go some more stocks. So I want to go a couple of stocks that I think are at interesting points. I'm actually going to bring up Disney. You know, Disney. I haven't spoken about this too much for a while because it's crap and it's been down a lot. But it's actually been destroyed into what I think is a bit of a tasty zone. Now, Disney, I've also been getting absolutely destroyed. I mean, destroyed. So where they are now is at a consistent little base here. And we've got earnings in, 2 weeks or something for this. But I would say a bounce above this zone could be, or above 91.67 could be very interesting, because at the moment, this is kind of creating a potential for an island reversal. So Disney certainly on the watch list, regardless of whether you like the stock or not. It really is irrelevant. If it does find a bit of a bounce, could be on the watch list for sure. PayPal is another one that I've been kind of looking at a little bit. Took the low off on last Friday. Earnings in one session, I believe. So that's going to be a little bit scary. And speaking of earnings, let's go and have a look at our earnings session, because you can see that we have PayPal on Tuesday plus minus 9%. So that's going to be kind of dangerous to trade, frankly. And we've got AMD after that, Starbucks, which was a request we'll look at. My favorite stock, or one of my 3 favorite stocks in the market, Microsoft. Do I like a buy here? Not really. Even though I'm a really big fan of it and bullish, I find it very difficult to buy at this price. Personally, I wouldn't do it anymore. I just kind of hodl and live on with Microsoft. But it's expensive. It's expensive. You know, it's not cheap. That stock is not cheap. It's very expensive. Arguably one of the most expensive in the market. Then we've got Meta over here with a plus minus 9% move expectation. Dash, if you are a gambling mad person, ARM and Dash could be wild. Options market's expecting something like plus 13, I think, or minus 13 on ARM. That's a big width. And what these are, if you're not familiar with them, is they're implied options moves. So they're not guaranteed. They're just what the options market believes the premium's in that. So that means if you're buying a call, which a lot of people do, and then the stock goes up 7% and their call doesn't go up much, and they go, oh, why? Why doesn't it go up? Well, it's because you paid for an incredible movement of maybe plus minus 9. So we know we've got big stocks this week. They're not actually at fantastic levels. You know, I still have a 240 target for Apple, but they're not, none of these have really come down into what I would say are like super awesome. Let's you know, go and kind of buy everything and go crazy, because they're not really at those zones. Yeah, they're not really theirs. Can you have a look at AMD and MU for semis? We can have a look at AMD because we've got earnings this week. So AMD, very tough because it's oversold itself all the way down to 138. It's, yeah, you're catching a falling knife a little bit here on this. I said here above 156 is when I kind of feel more bullish onto this pair. I'm probably not one to buy this dip, and that's just how I would do it. 2 minutes off the market open, by the way. I just wouldn't usually buy this dip because it looks like it's going to keep dipping. Yeah, that's not the kind of thing I would do. So if you like it though, you're going to have to put the stop under here. And the reason is because you at least need to give yourself that breathing room. Is it deep? Yes. Is it a ratio of maybe 3-1 if you even get it up? Yeah, that could be there. Ray says woke Disney. Nakbar says weak Disney. Woke Disney. Yeah. And stock needs to be woken up. I like that. Yeah, look, I haven't traded much Disney for a long time, but I do think it's come to some key points. All right, let's look at Starbucks, S-Bucks. S-Bucks also beaten down a lot in recent times. Then it rallied through with this really surprising Friday. And we spoke about it last week. And I said, oh, yeah, I think it might pull back a little bit after this, but it looks a lot better. And I probably still stick to that. It looks a lot better. We had that really strong weekly close. The main problem is earnings. So earnings is a big issue. Now, for a long time, I've had an alert at 68-ish dollars. Now, this is what I thought Starbucks would do. I thought it would sell into $68. I'd be prepared to probably wait until the earnings is over and then figure out whether there's a trade. Do I think there could be a great trade for the bull at 68? I feel like there is. And if it goes bullish off earnings, then we've already started to see the turn coming into that. So we can kind of be more sure that it really is a momentum / switch. So I think for Starbucks, it would be a wait and see, get the earnings out of the way, find out how the market reacts. It's on my watch list this week, there's no doubt. I like Pfizer today. Yeah, I like most of these stocks at the moment. If you go through Pfizer, Gilead, or however you guys say it in America, we don't have that company here. That they've all been very nice. Great price action structure. Beautiful Pfizer breakout last week. Yeah, it looks fantastic on the charts. You really got to like it. I mean, it's been sitting for ages. Volume has been good on the bottoms. I don't have volume on this chart, but it's been really good. Daily close is good. Wyckoff styling looks good. Might SOS here. I doubt it will, but might SOS. 33.50 is the first target on this, so it's not even too bad from risk reward. Yeah, I agree with you. Pfizer does look pretty good, says Joe. Yep. SoFi tomorrow going to be a big up down. Let's have a look at SoFi. A couple of times we've traded SoFi on the channel. We haven't really looked at it too much in recent times. I would see why it might be big. It's actually found some buying pressure, but keeps failing at 8. I'd probably wait till after the announcement on this, but yeah, it's going to be probably fairly wild. I know SoFi is likes a good 10% move in a day. Betting on SoFi up, says Tony. Good luck, man. Ben says Roku is plus minus 13 on Thursday. Yes. Now, Roku, long hated on this channel, by the way. Long hated. Over here, hated this thing. We've been here for a while in this market. I remember that greatly. A lot of you guys remember. Now, I like this chart. I'm looking for a $67 plus breach. I really wanted to get it above 67. You can see here multiple times failed at that level. And if the Rokus come out with the powerhouse, it's a very interesting chart. I kind of like what I see on the weekly. And then the daily, obviously, has got the same technique. So it's coming off a bull base already. This is actually where a speculative person would scale in, wait for the earnings, then hope the damn thing goes up. I have no idea whether this is a good stock or not. I hated it at its old valuation, and I mean absolutely despised this stock with the 10. I just hated it. People used to use it to troll me because this stock was just terrible when it was going up, and it's terrible now probably. But price action's price action, and it has started to show some turn signs. And I really would love to see it above here because guess what? It's got some big work to do. There's a couple of stocks that have this type of thing. Another one that we didn't like for a long time was Hood. Well, I'm going to get the right Hood, Robinhood. And Robinhood has improved in recent times, leading me into being quite bullish on the pair and thinking that this thing can even get up to 35. And I couldn't say today is going to be a bad day for it because, again, if crypto's running, a lot of the time Hood is benefiting from that. So, yeah, pretty nice. Thank you, Ben, for letting me know plus minus 13. RT says, hi, Tom, would you be in the buy zone for Microsoft and Apple? These two are always expensive. Well, Apple was relatively cheap for a while. This one here had a couple of interesting sell-offs. We had that 22 sell-off and then a really good underperformance period up until May. So you got to remember, until May, we had underperformance. That was actually an exceptionally good buy. And I feel like I kind of missed that one for the channel a little bit. Yeah, I mean, you miss some sometimes. I've got Apple pseudo like through proxy, but yeah, that was I'm annoyed at that one because it is actually very repeatable, and I like repeatable patterns. So if I miss something that just goes off and does a run, and I wouldn't have had edge on it, yeah, there's not much point. Now we have ding dings. The market's opened and it's opening at around that res point, so it looks like it's coming back down off it. So 50, what level did we not breach? So we still didn't breach the zone that we were talking about, which is 54.90, 55.10. Again, when that's where the options sit today. So we hit the res. We're finding a bit of resistance. We're coming down to gap fill, I guess. That's what we've done on the other markets. Nasdaq is holding up the best. Why? It's the most oversold. And Russell 2000, again, has just come in a little bit negative. So nothing really too crazy. Tesla actually doing better than you'd think at 3.7, and Nvidia doing nicely. So I'm glad with that. I still would go with the gap fill to the upside. So if we are coming down here today, let's just load SPX up for a moment. So we've basically gap filled just then. So if we're going to find buyers, this would be around that area that you'd hope you'd find them. We push in, and then I'd like to see us push to the gap fill on the upside. And that should take us to around that daily 20 moving average, which is a fantastic zone for a nasty bear to come back in and try to push it down. And if we do get more bullish, let's say we got here, which is kind of my expectation, and then we go above that point, then that is when we have to say, okay, pullbacks to be met by bull demand. Just go with the thrusts, go with the information that we already have, because we do mostly we're bullish. You know, if you're going for a 6 month, 3 month run, you've got to be bullish. As the price action. Any coverage on crowd? I've been watching it for all of us, but I haven't seen it do what I want it to do yet to show bullish intention. Is it oversold? Absolutely, Jackie, but it doesn't mean it's great here. Jeff says now it's an island reversal on Tesla. I just don't like that the supply zone it's got to. Yeah, it's in the middle of nowhere. I get what you're saying. It is an island reversal. So it's a gap down, gap up. There's no doubt. That's actually the island reversal trade. If you're a mad bull Tesla, you know, that's a trade there with a stop below the low. I mean, that's what it is. It's an island reversal. Island reversals are not bad. It's bucking this trend. Jeff's not wrong here. That's what I don't know where the hell it is. It's at a 50% fib. It's in the middle of nowhere land. You could argue it gap filled to the wick. Not in my zone, but hey, it is what it is. What gold stock would you recommend? I don't really recommend any particular gold stock. I'm just, you know, I usually have a smattering of them. So I usually have 4 to 5 gold stocks if I'm holding it. Meme stocks powering hood, pretty much. Memes are back. Yep. No worries, Ben. Thank you very much. Tesla Golden Cross. Yeah, Tesla doing all right. We'll just quickly talk about Chinese stocks as we open here in a moment, just because a few people asked me a question. I think I'm ducking them. I'm not ducking them. I'm just looking for actually some news to be talking about, because obviously they went to a 7 fib. Let's get that one out of the question, which is the odd US dollar. It was a $5 super chat. I do appreciate that. Odd US dollar down many days in a row. 1, 2, 3, 4, 5, 6, 7, 8, 9. So even more on currency. We were talking about the 8 rule before. It's a 9-day sell-off. Yeah, pretty aggressive. Now, if you get a fib and you pull off the low to the high, you'll notice again, golden pocket fib hit in the middle of nowhere land. So certainly not what I would call fantastic. Doesn't have any change, you know, any real signs of super recovery for me. You could mark out maybe this high and look for a closure above that. Maybe that will help you to make a better decision. But I looked at the odd. I don't really have anything for it, unfortunately. Will and Gabba says, thanks, Tom. I got to go get busy. BTC to the moon. Yeah, it's doing quite well. Look, it's been I'm very impressed with Bitcoin's trading. The last week and a half, 2 weeks, exceptionally good. 2 amazingly good entries. Amazingly good entries. Google after the drop from good earnings. Yeah. Oh, yeah. Google not too bad at the price, I guess. It's still cheap compared to the others. Notice Elon didn't like it too much today. He was very upset with it. I saw his post right into the weekly 20. So if you're a Google fan and you want to look at BTD, I mean, is it a semi BTD zone? But I would encourage maybe putting a different moving average on because it looks like this is probably sitting on about a 30. And in fact, you know what? I'll just move it and see what it's sitting on. I feel like it's a 30. No, a bit more than that. Probably a 35, yeah. So looks like that's the more consistent one. Actually, it's been a very good moving average for it. This stock seems to like that. You can see here quite a lot of respect. That's a 1-2, which I usually, yeah, so it's pointing a 160 into that demand range. Nah, I guess I'd just stick with that. I mean, that along with some other analysis, I think you'll find that's also a deeper fib, which should be, I think it's a 50-ish fib. It's not a shocking level for Google. It's probably oversold in here initially, but then it's got all the same problems. Gap fill there as well. Yeah, I do like it there. I like it a lot. I'm not going to sell my position in Google though. Just keep that thing going. Google's not expensive at all. No, it's cheap. It's the cheapest of the big mag stocks. The biggest, best stocks, Google's the best on the price ratio. Google is the best on the price ratio. All right, everyone. Well, this week we've got our key levels for the US 500. I hope you enjoyed the show. Again, try not to fail, force yourself into storylines and rhetoric. We just want to be following these charts. If you want to find out more about how to follow charts, how to follow price action, cyclical concepts, and more importantly, what really is ahead for AI, then you can join us over at fxevolution.com. We do have a 7-day free trial, but also we do have an advanced masterclass, which I think a lot of you guys would enjoy. It's really based on a lot of cyclical analysis. Should change your mind about a lot of things in the world and hopefully revolutionize the way you think about things. I noticed also oil here is finding a little bit more of a buy. And it's another reason why I've been able to call gold so well, because gold is quite repeatable. In fact, it could be one of the easiest trades out there in some ways, or easiest multi-year investments if you know what you're doing. US 500 again at res 54.90 to 55.10, big problem level for it today. And if it is able to get through, then we believe it's going for the gap fill. Okay, so gap fill 55.55. If we do end up selling off here, this is a possibility. 53.50, 5300. I would expect to buy at these areas, and great replication. So I'm not necessarily saying it's completely sold off and oversold or anything. I had a feeling last week, as we all did, that we were probably oversold on semis, and that was going to push the market into a bit of a DCB, or at least a bounce. And at this stage, we have to be bullish on a 3 and 6 month run, because the data, the stats that I've been presenting you guys, what we find from very good sources over on the internet, and obviously we share those, then they have just been incredible. They're showing great bullish strength. And I think it's not the time to be terrified of everything that is seemingly being thrown to us to worry us, to freak us out, to make us fearful. This is the wall of worry in a bubble, in my opinion, and that's late cycle. And it's going to be hard to find cheap stocks because they're all going to become overpriced. Remember 2021, they were even more overpriced. So bubbles happen all the time, and they usually get bigger than the other ones. And some of the signs that we'll be looking for in weakness, we'll find them together by looking at long shorts and looking at these reputable concepts. Thank you, guys. You have a great week, and it is fantastic. Few people just mentioning that McDonald's came in with an earnings. It lost revenue. So let's just read this quickly here. McDonald's second quarter results miss views as consumer spending slows, yet still the stock is up. And a lot of people will say, why is that? How is that possible? Well, the stock sold into the earnings. So you've got to think about it. This has already been selling for quite some time. It's been sitting on a demand zone. It looks like it's in consolidation. And at the moment, if it breaches through here, that's fine. That could be the worst earnings ever. But if the market says money flow go up, money flow go up. Same thing as the other day. Tesla had a really bad result. Never lose sight of this. Tesla's result here was bad. It went down and then into the result. The sentiment was negative, and then we flew. Why? Because it was already sold into it. Remember, this is the classic Wall Street play, the classic psychology play. We get fed information, it's wrong, then we get smoked. All right, guys, you have a great time. Keep at it. Thank you so much for your support on the channel. Thank you for the super chats today. Shout out to Nando P, Joyce Fung for becoming a new member. Appreciate it. Big Silver for giving us a shout out, even though he's paying member. But anyway, thank you very much. And Nando P again coming in with the odd US dollar. Thanks, guys. Have a great week. We will see you next Monday for the open. And yeah, hopefully we can find some more stocks and stuff. Be a little careful this week. Be cautious. I mean, we know we're in volatile times, so don't feel FOMO too much. It's expected the Nasdaq is going to see these rallies. See how it's doing better today? Why? It's the most oversold. Where is some of the biggest money flow? Oh, surprise, surprise. It's Nvidia. Surprise, guys. Yeah, we already knew this. Okay. This is not news to us. We know this. We know how the game's played. Over here, you guys, big brains over here, you knew. You said pull back in time or a bit of a correction. 1 to 3 months. Yeah? Go back. We did it together. All right. Thanks, everyone. Bye for now. Amazing work. Catch up.